Governments have grabbed private wealth many times in the past. Could the same thing happen today? The die-hard gold fans totally get it, and guess what? They've got legit reasons. Throughout history, governments worldwide have been eyeing gold like it's the last slice of pizza at a party. They've pulled stunts like regulating or straight up confiscating gold, all in the name of keeping the economy in check, securing the nation, or playing puppet master with the currency. So if you're clutching your gold coins, you're not being paranoid, you're just gold savvy. As we kick off this episode, if you find yourself nodding along or even just mildly amused, do us a favor, hit that subscribe button and give the like button a good thumping, just like you're trying to beat the market. Your support keeps the financial fun rolling, so let's dive in. In 1933, when the Great Depression was throwing punches, President Franklin D. Roosevelt dropped a financial bomb with Executive Order 6102. American citizens had to hand over their gold stash to the Federal Reserve and in return get some good old US dollars at the rate of $20.67 per ounce of gold. He announced many persons throughout the US have hastened to turn in gold in their possession. There are others, however, who have waited for the government to issue a formal order for the return of gold in their possession. Hold on a second, return of gold? Perhaps President Roosevelt believed the government rightfully owned all the gold in the country. Within a few months, gold went to nearly $33 an ounce, and eventually, after some legislative action in 1934 with the Gold Reserve Act, it settled at $35 an ounce. Back in the day, the US monetary system was kind of like being stuck in a gold handcuff. No printing money allowed. So what did Uncle Sam do? He went on a gold confiscation spree, snatching up everyone's private gold stash only to pull a sneaky move. A little reevaluation here, a bit of de-evaluation there, and voila! The US dollar got a makeover, and suddenly there's more money floating around. Executive Order 6102 practically turned owning private gold into a criminal offense. People had to surrender their shiny treasures under the threat of $10,000 fines, imagine $1 million today, and the bonus threat of a 10-year vacation behind bars. The US government wasn't the only one on the confiscation spree. In China, the Communist Party pulled a gold confiscation 101 move after they swooped in and took the reins in 1949. Everyone had to hand over their bling to the state, and in 1938, the Canadian government pulled the Gold Reserves Act. If you wanted to sell or ship off gold reserves, it had to go down through the Bank of Canada and only to countries that they were on talking terms with diplomatically. The 1933 gold confiscation in America still has modern-day effects, for example, in Argentina in the early 2000s. When the Argentine peso took a nosedive from the 1-to-1 peg to the US dollar to a whopping 3-to-1, the Argentinian government went all emergency national crisis, folks, citing the 1933 US dollar shakeup, froze the US dollar bank accounts in the 2001 to 2002 period and swapped them for the not-so-mighty Argentine pesos, leaving the account holders with savings now worth about 1/3 of the original deal. The US was still on the gold standard in 1933, meaning the value of the US dollar was directly linked to gold. Executive Order 6102 was like giving the Federal Reserve permission to print money without parental control to crush deflation and rev up the economic engine. So they snatched the private gold and voila, the 1930s take on quantitative easing was served. Who needs a fancy name when you can just call it a gold grab and a currency shakeup? The gold standard was the global trendsetter in the 18th and 19th centuries, reigning supreme until World War I barged in 1914. Each country had its own gold price tag. For example, the US went with $20.67 per ounce, while across the pond in the UK it was 4.25 pounds for 1 ounce. This basically set up a fixed exchange rate between the pound and the dollar. To add some flair to the arrangement, authorities promised that your paper money was like a VIP ticket, fully convertible into gold. Yep, the good old days when our money was as good as gold. The gold standard was like the ultimate money referee, putting a tight leash on governments to stop them from going all out with the printing press. When World War I came along, governments were like, hey, we need cash for all this military jazz. So they kissed the gold standard goodbye. After the war, some countries, like the UK, tried to bring back the gold standard, but the whole thing fell apart again during the Great Depression. Then, after World War II, we tried a different flavor of the gold standard under the Bretton Woods system, where the dollar was tied to gold and other currencies hitched a ride on the dollar train. August 15, 1971, President Nixon dropped the bombshell, "No more turning dollars into gold, folks." Just like that, the world's go-to currency goes from gold-backed to, well, backed by nothing but trust. In the 1971 to 1976 period, gold more than tripled in price. Translation: the once mighty American dollar took a nosedive, losing over 2/3 of its swagger in just 5 short years. Ever wondered how different things would be if we were still holding on to the gold standard? It's like imagining a parallel universe. Inflation and market volatility would have been lower, but so would growth. We'd have an economy resembling a well-mannered dinner party. Predictable, but about as thrilling as watching paint dry. Say goodbye to the wild swings fueled by credit and leverage. We'd be trading excitement for stability. The financial playground would be less of a battleground with fewer financial innovations. Technological leaps might have been fewer. The financial fuel needed for those risky but groundbreaking projects might not have been readily available. Imagine a world where governments can't just conjure money out of thin air. They would think twice about borrowing. So, trillions of national debts? Not a chance. Social Security and Medicare? Sorry, folks, not without a massive credit boost. How about the world wars? They'd be like that expensive vacation you hesitate to book. Wars are pricey, and without the fiat currency ferry, they'd be less of a blockbuster. Imagine politicians having to think twice before going all in on wars when the country's gold stash is on the line. Wars might have been less frequent without fiat currency and, most probably, no world wars. So, wasn't it better to stick to the gold standard? Well, that ship sailed a while ago. The dynamics have shifted. When the US economy's rocking it, the dollar flexes, gold or no gold. But if Uncle Sam's economic dance floor gets a little slippery, the dollar might stumble. It's a delicate dance, and the US is calling the steps. The idea of governments snatching up people's gold stash is like a blast from the gold standard era. Nowadays, the gold market is kind of like that tiny side dish at a buffet. Cute, but not the main event. We're swimming in a sea of other assets, making gold look like a small fish in a big pond. It's like comparing a pebble to a boulder in the financial world. Take, for example, the stock market, where trillions of dollars are tossed around like confetti every single day. Then there are bonds, another big player, representing debt instruments valued in the trillions. Real estate? It's like a sitting duck for local government levies. And don't even mention pension pots. Those are like financial assets just waiting to be nabbed. When you compare all that to the puny gold reserves, it's like bringing a squirt gun to a water balloon fight. In 2023, the US bond market alone was worth $51.3 trillion, while the total US stock market capitalization was $50.8 trillion. Meanwhile, American gold reserves were kind of just hanging out around $480 billion. Governments have grabbed private wealth many times in the past. Could the same thing happen today? The 1933 gold grab seems to be dropping some beats that sound eerily familiar today. Mark Twain had a point. History might not hit replay, but it sure knows how to rhyme. Share your thoughts in the comments. Do you think the 1933 gold confiscation can happen again, maybe with our digital assets? If you enjoyed this video, don't forget to subscribe and smash that like button like you've just nailed the perfect parallel parking spot on a crowded street. Until next time, may your investments be fruitful and your wallets never feel on a diet.